Assalamu alaikum and very good evening to everyone. My name is Tasmisi. So today we will be presenting an analysis and a strategic recommendation for a Zynga company. So a Zynga company is a gaming industry and it was founded in 2007. It also knows as a popular game like Farmville, Words with Friends, and Zynga Pocket. The company mission is to connect the world through game. However, right now Zynga company doesn't have its own vision statement. So in our presentation, we will highlight the current state on the company and provide strategic recommendation that aim to enhance its competitive position in the market. So this is our group members. So let's have a look at the purpose, vision, and mission statement of this company. So Zynga current mission is connect the world through game. So this reflects the goals of bringing people together through interactive entertainment. However, we believe that this mission still lack of the seven component of the mission statement, such as market, technology, and so on. So to address this issue, we come up and we also propose the new mission for this company. And as you know, this company doesn't have its own vision. We also propose the new vision of this company as example of this slide. Forward to the internal assessment. So, or basically we can call the internal factor evaluation metric. It's basically strategies to use to evaluate firm internal environment and review its strengths and also its weaknesses of the company. So as you can see, this Zynga company is actually have its own strengths and the weaknesses that we come up with. So we also rating the score by differently. The first one is rating 1, it's mean poor. Rating 2 means average. Rating 3 mean above average. And rating 4 is born for superior. So look at the strengths now. We have top 5 company industry is the most weight score in this range. And look at the weaknesses. We have the most weight score is actually the company protects its intellectual property. So we can conclude that total IFE score is actually 1 and the total weight score is 2.95.
Assalamu alaikum. This is me, Rafi. Now I'm going to talk about our external assessment metrics. In our external assessment metrics, we include our company opportunity and threats. Basically, we are providing our weight and rating score based on our four categories, which is poor, average, above average, and superb. So, for the weight, we are providing 0.10 and rating 4 for the superb one, and for the poor 0.01 and 2. Then we are multiplied both weight and rating, and then we get our weight score. So our total weight is 1 and our weight score is 0.83. So for more understanding, we are include with describe in our report. So that's all about our external assessment. Okay, now I'm giving a brief for our SWOT metrics strategy. We all know that every company have their own SWOT strategy for growing their company in that marketplace. For that Zynga company, they have also their strategy like strength and opportunity strategy. For example, global expansion and mobile device. They need to explain more about their company and they need to promote their brand in the whole world and extends trade strategy like they need to more invest for research and development sector to improve their product and service and weakness and opportunity strategy like market channel diversification. They are rely on only Facebook. They need to diversification their channel like Facebook, Instagram, and another platform. And also the weakness threat strategy like alternative advertising. So they are only advertising on Facebook. Not no, they need to advertising diverse platform like Google ads, Facebook ads, YouTube ads. This is the all about our SWOT metrics for this company. I mean the Zynga company, and for better understanding, we describe more details in our report. So that's all about our SWOT.
Assalamu alaikum everyone. I'm Abir Hussain Sajjad. So now I'm going to talk about BCG metrics. So it's a strategic tools used to analyze a company portfolio of business units or product line. So let's analyze our BCG matrix. So first we have positioning of division. So in the picture we can see our bubbles pointed on question mark quadrant, which is a high market growth rate and a low relative market share. So let's talk about our online game. So market share and sales growth rate is 0.06% and 0.07%. And advertising market share 0.10% and sales growth also 0.10%. So let's analyze our financial table. So Zinza revenue $1,320,000 and the top industry revenue $21,450,000 and sales growth rate and market share position is 0.07 and 0.06%. And for advertising, Zinza revenue is $1,500,000 and top firm revenue is $14,300,000 and sales growth rate is 0.10% and market share position is 0.10%. So that's all from our BCG metric.
EBIT and EBT, which is part of income statement. Whenever any transaction impact in the income statement, that means it will affect in the net income. So if we see the Zynga's income statement and the financial report, we can see there is a huge difference of the revenue and also EBIT and EBT. So how it's actually happened in 2014, we can see their revenue has been down 21% and at the same time their share price has been down 20%. So that is why in 2013 their EBIT was 66 million, which is minus 66 million, and it goes to the minus 245 million, and that is why EBT was 65 million in 2013 and it goes to minus 233 million, and its impact at the end in the net income. So the net income was in 2013 was 37 and it goes to the minus 226. So that is a huge disappointment of the Zingas.
Hello everyone, my name is Khalifa Saidi and I'm going to continue with this presentation, and my part is projected financial statement. So we will project for 3 years. The first one is 2015, second one 2016 and 2017. And here we have two tables. One is for projected income statement, another one is projected balance sheet. Starting with projected income statement, as you can see, revenue we project to increase from 978 to 1,316 for 2017. Also, cost of goods will increase, gross profit will increase. Interest and non-recurring is zero since we don't have data for 2014. So this is for income statement. We have also balance sheet. In the balance sheet, we have cash and equivalent, accounts receivable, inventory, and other current assets, total current asset. All we project to increase, as you can see here, except for the inventory, since we don't have data for 2014, but other data will increase. So it continue balance sheet, and we have liabilities and we have equity for projected years 2014 to 2017. So you can see we have account payable, which is increased 20 to 2026. Also current liability, it will increase 78. We have 90 and we have 109. Also the same applied to the long-term debit from 2015 to $560 to 2017. So we have total liability, the same applied. For the equity also, as you can observe from our table, also it will increase. Common stock, it will increase. Retained earnings, our projection, it will increase. But treasury stock and paid in capital, in this one we don't have data because in the data 2014 is not available for this Zynga company. You can see total equity, it is 6,281. So also it will increase. So this is projected, and this is my presentation. Thank you so much.
Let's talk about recommendations. So we recommended advantages and disadvantages of alternative strategies. So first one is diversification and new market penetration. So advantages: market expansion, risk diversification, increased revenue potential, and innovation and competitiveness. And disadvantages: high initial cost, management complexity, then market entry barriers, and cultural and regional adoption. And the second one is strategic partnership and increased R&D. Advantages: access to new technology and expertise, share risk and cost, enhance market reach, and focus on core competencies. And the disadvantages is a potential for conflicts, then intercultural poverty concern, and integration challenges. And the last one is competitive disadvantages if partnership fails. So that's all about our recommendation.
In the conclusion, we can say that our report analyzed Zynga's internal and external environment and provided strategic recommendation to boost its competitive advantage by revising its mission and vision strategies, uh, uh, enhance game expanding platforms, and performing strategic partnership. Zynga can align its goal uh, with market aspirations, leveraging strategies in research and development and social media, and addresses weaknesses like dependence on Facebook will be crucial. So implementing these strategies will uh, position Zyngas for sustainable growth and long-term success in the dynamic game industry.